All right, so you've purchased a property, and now you're needing to figure out how to record the HUD or the ALTA statement or the closing disclosure, whichever closing settlements chart thing that you've got. You've got it in your hands, and you're like, okay, how do I put this in QuickBooks? Well, I'm going to show you exactly how to do that in this video. So let's dive in. Now, first things first, you need to break it down to as simple as you can. So you're going to see something like this. This is a general HUD statement. This is kind of more of one of the complicated ones, but you can see that there's the borrower's transaction and the seller's transaction. So this one is going to be just a cash purchase. There's not going to be any loans or anything on here, just to make it simple. That way you're not getting confused by anything. But you're just going to be looking, as the buyer, you're just going to be looking at this side. This is all that you care about right here. Now, when we're putting this in, we got to break it down as much as we can. So first line here is contract sales price. So this is the price that you paid for the building, $125,000. So we're going to take that, and this is the first line. So I've already filled out the journal entry for the HUD statement, and this first line, as you see, is only 25,000. Which, at first glance, you're like, why the heck is it only 25,000? It's 125,000, and as you can see, you would be correct at 125,000. Now, we have down here buildings, which is 100,000. So I just did this generically. You are actually going to need your CPA to break out what the percentage is, but you're going to take this purchase price, and you're not going to, if you've purchased a building and land, obviously, land or building and land, you're gonna want to split these out into two. Why, you may ask? Well, the main reason, the only reason, is that land does not depreciate. You're not going to get land to devalue over time, but the building, on the other hand, does. And you got to separate those two, because the building you're going to depreciate, the land you're not. So for tax purposes, you have to. So I've split it up just generically, made even numbers, 25,000 for land and 100,000 for building. And again, your CPA is going to be the one who separates these, so talk to them, make sure you understand what that is. The next line we've got real estate purchase closing costs. So this number right here is going to be a whole bunch of numbers on the HUD. So you can see that it's right here. It's 6,400. But what does that come up to? You can see this says line 14. So line 14 is going to be right 1,400. It's going to be right here, and you're going to see that totals up. Well, it totals up for all of these costs. So you got survey, you've got the government recording charges, you've got all of these charges for owner's title insurance, the lender's title insurance, and the service fees and lender's title insurance. So all of these are going to add up to that. And then if you had a loan on this, then you would probably be seeing more of these charges up here, like the commissions fees, or origination charge, or points. You'll be seeing that a lot more right here. But since this is just a simple cash purchase, everything is kind of pretty simple, and you can just take this number right here and for the settlement charges, and that is going to go underneath closing costs. The next, we're going to have some property taxes. So the property taxes are going to be a little bit different than everything else. So far, we've put everything on the balance sheet, but these two right here are actually going to be your first expenses on the sheet. You're gonna you can see that I have it as an expense, and then like a closing cost is a sub account of the real estate, which is an asset. So the closing costs are getting rolled into the to the building and the land, getting rolled into that cost as an asset. But these two are actually going to be expensed the same year that you purchased the property. So we're gonna put these on the profit and loss statement. And we're getting these from right here, just these two. Make sure that you always put descriptions in your journal entries. That way, whenever you do take the HUD and put it on here as an attachment, you can always see where you got them, you know, and understand what you're doing. And I actually labeled this wrong. This was supposed to be county taxes. And then that should be it for what you have to pay for those. And then once you've done these, you can see that it's $134,750. On your deal right here, you're going to see $134,750 is a total for all the debits. So everything that you're paying towards, the money's going to, is going to be $134,750. But we have, you know, debits, credits, we have to offset that. So we're gonna pull out some money, and we're gonna be, you know, spending money. And if you watch the last video, I went over the earnest money deposit, and we already created this right here. And so what all we're gonna do on the last video, what we did is we pulled money from our main checking deposit and we put it into this earnest money deposit. Now what we're gonna do is pull it out of the earnest money deposit. So we're gonna credit it because it's an asset. We're gonna credit it, put it back in to the building and the land. So that's where some of this cost right here is gonna be going towards buying the land or buying the property. Next, we got some property taxes, some more city taxes. So what we got, we're getting credited some of these back, some of the city taxes back from probably the owner that we're buying it from, probably, you know, paid some taxes for some of the year or something, and we're getting credited some back. Then we got the security deposits. So if the original seller, if he's got some tenants in his property, he's going to take the money out of his trust because you put the security deposit in the trust. Take the money out of that trust, and he's gonna throw it towards you, and you're gonna get the rest of whatever he pulled out. If he pulled out like the last month's security deposit, if he pulled out, you know, however they did it, whatever it is, he's gonna give that to you, and then you have to put that in your trust so that you have the security deposit to give back, because technically it's money. It's a liability. It's money that you owe to the tenant. So you always put that into a trust. That way you don't get in any kind of issues with that. And then we have the prorated rent, which I'm pretty sure we had it right here. So we put that as rental income because, you know, we probably bought it in the mid-month or something, and they're prorating us what we're owed. And then once you have all of this up, all you have to do, and we'll do this real quick. Once you have everything up on here, like here, what you're gonna do to tie it all together, because whatever's left is what you're bringing to the table, what money or cash that you're bringing to the table. You just put your checking account and then boom, it'll auto-populate. QuickBooks will auto-populate exactly what you need, and you'll put down cash at closing. And so this is what you have to bring to the table in order to finish the closing, to finish the deal. And you can see that number right there is gonna be right here. So this is what you're gonna be bringing to the table. And this statement, this HUD statement, it's a little bit, you know, older school, you know, it's a little, now we get the ALTA statements or use the closing disclosure. All the information is the same. This one is actually the harder one to read. So if you can read this one, then the other ones become, you know, so much easier. They are on the ALTA statement most of the time. They have it separated between credits and debits for seller and buyer. So it's really easy to go through. But now you've purchased your property, you have it in QuickBooks, you've got everything lined up. Now if you're holding it for a rental for a long time, you're collecting rent, you're, you know, doing repairs, you're doing some CapEx, stuff like that throughout its lifetime. And then in the next video that I'm gonna do, we're gonna show you how to sell the house. And in that video, we're gonna put it right here. So stick around.